So you've heard of lifetime ISAs and what a great investment tool they can be, but you're wondering which lifetime ISA account do I need and which one should I go for? Well, in this video I'm going to break down the different types of lifetime ISAs and compare the different options, so you can make up your mind which is the right lifetime ISA for you. The lifetime ISA scheme has been introduced by the government to help you save for a house or save for retirement. Now you're allowed to pay in up to £4,000 a year and they will contribute £1,000, or it'll depend how much you want to invest. So they'll top up your investment by 25%, which is essentially free money that you want to take advantage of. If you want more on my complete strategy of how a lifetime ISA works and how you can utilize it for an investment or retirement, if you haven't already seen my video on the lifetime ISA strategy, I suggest you take a look at that, because you can compare the difference between a cash ISA and a stocks and shares lifetime ISA, and then you can see, if you're going for retirement, how massive the difference can be. I'll link that at the end of the video, so if you haven't seen it, don't worry about watching it now, you can watch it at the end of the video. And if you're interested in advice on what to buy in a stocks and shares portfolio, what investments I have and how to make more money, make sure you subscribe and stick around for that. So before we start, I just want to mention that I am, as of recording this video, not affiliated with any of the companies mentioned, so this review is completely unbiased. And also please remember, this isn't financial advice, this is just my own personal opinion. So let's talk about providers. When you look at lifetime ISAs, you'll be surprised to see there isn't a huge selection of providers available. Now this is partially because it's quite a new scheme and a lot of companies haven't adapted it yet, and also they can't make a lot of money off the back of it. A lot of these companies can make much more money off some of their other investment devices and other accounts and other savings accounts, so they're not really worried about starting lifetime ISAs. And also because it's through the government, they have to go through a lot of terms and conditions that need to be met in order to open an account. So the selection is limited. There's quite a lot of vague little companies that you might not have heard of. I'm not going to mention all of those or go through every single account under the sun. I've had a look and I've compared the top accounts, and I'm just going to mention those to you today. I don't want to waste your time going through accounts that don't really matter. Now the first thing you need to ask yourself is whether you want a cash ISA or you want a stocks and shares ISA. But it really comes down to what your strategy is and what your plan is to do with the money. Now if you're looking to buy a house, a cash ISA might make much more sense. If you're looking to buy in the next couple of years, then you just want to keep your money in cash and you're really just looking to take advantage of that government bonus. Now, if you're looking at a lifetime ISA for retirement, you're going to be much better off with a stocks and shares ISA because of the amount of years you're going to put it in, and you're going to get compound interest, and that can add up to a huge sum. I actually worked out if you put it in at 18, you would have roughly 1.4 million by the time you were 60. But of course, a stocks and shares ISA does come with a level of risk. Now the level of risk can be minimised. You can just go for really simple funds, which make on average 7.75% a year, which compared to a cash ISA is a significant amount of money. But like I said, if you're going for a house, you're likely just trying to take advantage of that £1,000 a year for free to put towards your house deposit. And also remember, if you're buying a house, the house needs to be under 450k and you have to be a first-time buyer. Now your partner can be a first-time buyer and you can already own a house, but there has to be one first-time buyer to use that towards a property. So if you don't meet that criteria, a lifetime ISA probably isn't for you if you're looking to buy a house. So let's dive into the cash lifetime ISAs and see which is the best account on the market. I'm going to rank them all from worst to best. So the first company we're going to take a look at is Skipton Building Society. Now these are going to be banks that you've not really heard of because some of the smaller banks have kind of taken advantage of the fact that some of the bigger ones aren't going for it at the moment. 0.1% gain on your money, which is really, really low. And you're going to see this as kind of a recurring theme, that they're all quite low interest rates. Because of that rate, we're going to have to put Skipton Building Society in last place. Now the next one we're going to look at is Newcastle Building Society. Now again, they're a considerably small bank compared to some of the bigger players. Now they offer a 0.35% interest rate, which is slightly higher than the one we've just mentioned. Also important to note that all of these accounts you can start with as little as £1. So you don't need a huge lump sum to invest. So because of that, Newcastle Building Society are going to have to sit just above Skipton because they offer a little bit more interest rate. Now the next company is Paragon. Now again, they're not a hugely popular bank. Now they do offer a significantly improved rate, especially compared to Skipton. So they're offering you 0.5% on your money. So based on that fact, we're going to have to put Paragon just above Newcastle Building Society. Now this is a point where it gets more interesting. So we're going to take a look at Moneybox. Now Moneybox are a really popular option. They again offer you this 0.5% rate. But for the first year, they're going to give you a bonus of 0.35. So you're actually getting 0.85, which is the highest on this list. So that would put Moneybox above Paragon. So the next company on the list is the Nottingham. Now they're quite a straightforward bank. They're again not a really popular bank, but they are offering a 0.8% tax-free annual interest. Now that means after the first year, you would actually get more money than Moneybox, because Moneybox is going to drop back down to that 0.5%. Now what's interesting is they're actually rebranding to be Beehive Money. Now the reason they're doing this is because obviously the Nottingham versus Moneybox is not really appealing. They want to appeal to more young people because that's primarily who lifetime ISAs are targeted at. So Beehive has a much more higher chance of competing with Moneybox. But of course Moneybox have invested way more money in their app and interface, so it's a really good user experience. But I want to quickly just show you this sum. So we type in your £5,000, which is the amount you're going to contribute every year with a government bonus. We divide it by 100 to get a percent, and then we times it by 0.3. So that is the difference between Moneybox and Beehive Money or Nottingham after the first year. So you're going to end up with £15 difference. So if it was me, if I was looking at the two apps and I saw this nice user interface, if it's for the sake of making £15 extra a year, just because I'd want a nice user interface and nice user experience. And for the sake of £15, I think it's well worth it. And the other thing I want to quickly show you when you're on the Moneybox website, you do have this really helpful calculator. So you can see how much you want to save for a deposit. So for example, if I put in £20,000, when do I want it by? So I say, okay, I want it in 5 years. It will tell you exactly how much you need to contribute each month. And then it will tell you how much exact government bonus you're going to receive. And then you can see a complete breakdown if you want to of these app figures. So that's really useful for you guys to take a look at. And I'll leave a link to this down below if you want to take a look yourself. So for this reason alone, I would have to put the Nottingham in the A tier and then move Moneybox up to the S tier. So in order, this is the ones that I would say were the best. We've got Moneybox at the top, right down to Skipton at the bottom. So really, the only comparison you're going to make is interest rates in this case. They're all quite similar on the other facts, how much you deposit and how much you pay into on a regular basis. You can basically customize them to what you want. They're going to differ slightly, but there's not much in it. And at the moment, the interest rates are so low that you kind of, like I said, are splitting hairs. There's not much difference in any of the accounts. So like I said, I would go for Moneybox just for user experience alone. And it's important to remember these interest rates may go up in the future. While they're really low now, as inflation rises, the interest rates will go up. But you are basically just doing this for the free government money. And you can double this up with a partner. So for example, if there's two people, £4,000 each a year, that's £8,000 each, £16,000, and you're going to get £4,000 for free from the government to hit your £20,000. So it's really a great scheme to take advantage of. So as a general rule of guidance, I would say if you're looking at over 4 years plus, you're going to want to take a look at the stocks and shares ISA. If you're looking under and you're looking to buy a house, then the cash ISA is right for you. I would not really recommend holding a cash ISA if you're looking to retire from it at 60. So now we've looked at the cash ISAs, let's take a look at the stocks and shares ISAs in comparison, and then you guys can work out what's right for you. So when you're looking at a lifetime stocks and shares ISA, it's important not to get too bogged down by the fees. Now for this, I'm not going to do a tier list and stack them in the same way. And I'm going to explain to you why. Now, a lot of people are just going to mention every provider, talk through the options, and tell you that they're all great and compare the fees on a very small level. But when you look at the bigger picture, it's very clear that there's not very much choice and there's one clear winner. And now I'm going to go through the options and show you why. So the first ones that I know everybody's going to mention are Nutmeg and Moneybox. Now, there's a reason I don't go for these robo-investors, and they're called robo-investors because they basically do all of the work for you. Now, they look really low cost and really great. They're really well designed, and you think they've got a really nice app. It invests the money and it does it all for you. Now, why wouldn't I suggest going for one of those? Well, the reason is the returns aren't that good. So the returns you're going to get with Nutmeg or you're going to get with Moneybox are going to be way lower than you're going to get with one of the bigger providers if you do it yourself. Now, it sounds great in principle that they do it all for you, but it's quite simple to set it up yourself. And you might panic, you might think, I don't know how to do that, that's why I want Moneybox to do it for me. And that's what they kind of prey on, and that's how they get you as a customer. But in fact, it's not that hard to set up one yourself. And I'm going to show you in a later video exactly how to buy a fund and what you should buy within your account to get a much better return than Moneybox or Nutmeg. And that's why I can't feasibly kind of recommend them to you guys, because I don't think they're a good option. You also have accounts like this One Family, which is quite similar. They're focused a little bit more on the environment and kind of getting you to invest sustainably. But you could do that with your own account if you really wanted to. And you do have to balance what profit you want to make versus what companies you invest in. And I just want to show you guys quickly a breakdown of the fees and show you why it doesn't particularly matter. So in this table I found, you can find a comparison of the different costs. So by this, you might quickly think, okay, let's go for AJ Bell because they offer a much lower annual charge than Hargreaves Lansdown. But actually, the charge isn't that much. So 0.45% with Hargreaves is actually only going to £45 a year. Now, when you add that up over years, if you're making really good returns, then a £45 charge in your account, you will not even notice. I've been with Hargreaves for quite a while and I've not even noticed the charges. The only charges you do notice if you're buying really big amounts of shares in overseas companies, because then you pay an FX charge, which is essentially a 1 to 2% charge. So for example, if you're buying £25,000 worth of a share, you then notice a charge, and the other companies have very similar charges, and they're not cheaper in this case. There are cheaper providers for buying things like that, but they don't offer a lifetime ISA as of yet. If somebody like Trading 212 or Free Trade offer a lifetime ISA, then they would be significant competition, but at the moment that's just not available. So really, when you look at these, if you look at Nutmeg for example and see 0.45 or 0.5, this isn't really comparable as well because they're funds. So some are funds and some are just account charges. So they're not really a good comparison. If you buy a fund within any of these, you're pretty much going to pay similar costs. And when you compare the fees compared to what you're actually going to make, Nutmeg and Moneybox actually become way more expensive. Because okay, you're saving a small amount on the charge when you sign up, but actually if you're making 2 or 3% less a year, then you're losing a significant amount of money. And especially if you're looking at doing this for retirement, when you get to the stage when you've maybe got 500,000 plus in your account, a small percent is going to make a huge difference. Now that really leaves you with 3 options. So there's Foresters Financial, who basically let you open an ISA and have a stocks and shares ISA within there. Now I've not really heard of these, so I've not got the experience with the platform, but their fees are quite similar. And you've got AJ Bell, who are listed on the stock market. They're also a really big company. Their fees are also very similar, but their interface isn't particularly great. So with AJ Bell, you're not going to get a particularly nice app and interface to kind of work with. You could also look at something like this EQI, which is kind of a relatively new company I've not particularly heard of before, and they offer a lifetime ISA, and their charge is 0.2%. But this is where they kind of get you. They put it as 0.2% because they make it look like it's so cheap, but actually it's capped at £40, whereas Hargreaves is capped at 45, so it's literally £5 difference. The cost in buying a share is about 50p difference, so there's really not much difference in the cost between these. So in my opinion, you're much better off going with a big company like Hargreaves. Now the charge is 0.45% a year, but it's capped at £45, which doesn't really matter. And they've got a really nice app and a really easy interface to use. You can buy UK shares and UK funds, and you pay pretty much the same as anywhere else. But the general message I want you guys to see is if you buy a fund within Hargreaves, you're going to get a much better return than you will with Nutmeg or Moneybox. You can simply go into Hargreaves and you can buy things like your Vanguard funds or your iShares funds, really popular funds that track the general market. So you could go for a FTSE 100 tracker and get your 7.75% a year, which is going to be much higher than Nutmeg or Moneybox. So looking at all of these and doing my research, there's really 2 clear winners. If you're looking for a cash lifetime ISA, you're going to want to go with Moneybox because it's low cost, it's easy to use and a nice user interface. If you want to go with stocks and shares, I suggest Hargreaves Lansdown. Again, you've got a really nice app and user interface, and you can take control of your savings and your investments. And again, you can get a much higher return on your money. It may be that the situation changes next year when more companies jump on board. Personally, I'm going to open an account with Hargreaves Lansdown next month and start my stocks and shares journey. And I'll show you guys what I'm buying within the account, so hopefully that will help you out. So if you wanted to follow me and do that kind of method, you could put your money in, but you don't have to buy right away. You don't have to think, oh my god, I need to wait for Chris's video to realise what to buy. As long as you put your money into Hargreaves and use your allowance this year, you don't have to buy yet. So I hope this was useful and it's cleared it up and you know who you're going to go for. If you could hit that like button and subscribe, it'd be awesome because it helps the channel grow and let more people see this video. So make sure you use your allowance and get that government bonus. And I'll see you guys in the next video.